You may be hearing a lot about Roth IRAs and Roth conversions lately, and we're absolutely part of that conversation as well. Why? Because Roth IRAs are a great planning tool for the right person in the right situation. But if you make too much income, you might not be able to participate in this conversation, or could you? Well, we're going to be answering that question today in our short educational video about Roth conversions. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason that we make these videos is to help make the difficult and stressful process of retirement income planning simple.
Yeah, and we do this by incorporating a team of expert advisors, ranging from certified financial analysts, certified financial planners. We also incorporate estate attorneys, insurance advisors, and other needed professionals to help our clients develop a written retirement plan that's going to let them know when, where, and how to take money from their retirement savings.
For the best retirement income planning advice, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So if you're single and you have an income over $139,000, or if you're married filing jointly like we are, and your income is over $206,000, you cannot directly contribute to a Roth IRA. So the joy of tax-free growth and later taking tax-free income perhaps could not be for you unless there was not a back door to actually getting into a Roth IRA. That's what we're going to talk about. We're very thankful that in 2010 there was a law passed that removed the income limits for who can actually contribute to a Roth IRA by doing what they call a Roth conversion. And so that's what we're going to cover here in our educational video today. But before we get into all of that, there are two rules to retirement income that we always like to give you. What are those two rules, Andrea?
Well, rule number one is to never run out of money. And rule number two is to never forget rule number one.
So let's talk about how you, no matter how much income you make, could get into a Roth IRA and enjoy tax-free growth and tax-free income like everyone else. So let's go ahead and talk about a backdoor Roth and how you can actually accomplish this. When it comes to a backdoor Roth IRA, just for understanding, a backdoor Roth IRA lets you convert your traditional IRA or old 401k to a Roth, even if your income is too high to contribute to a Roth IRA by itself. So when it comes to actually doing a backdoor Roth conversion, how do you go about doing this? Well, Mr. I don't know always have questions. So one way you can accomplish this is by contributing to a traditional IRA and then immediately converting that to a Roth account. Now, you will have to pay taxes on those dollars, but understand if those contributions to that traditional IRA were all made with non-deductible dollars, if you made non-deductible dollars to that traditional IRA, you can convert that traditional IRA to a Roth and there will be no taxes involved. You've already included those dollars into your taxable income, so no taxes will be involved upon that conversion. Very important to note that. Another thing that you can actually do is if you have an old 401k or another old qualified account, you may want to convert that to a Roth as well. You may have a $50,000 401k from a prior employer. You may want to convert that to a Roth as well. Well, of course, when you do that, you will also have to pay taxes at the time of that Roth conversion. But here's another key point. If that 401k has any after-tax contributions, you would not have to pay any taxes on that part of your conversion into that Roth. This situation can create what we know as a mega backdoor Roth. And this can be ideal for a lot of people who make really high income. We will talk more about a mega backdoor Roth in our other videos, but it is a very unique planning tool that we can use for clients who are maximizing their 401ks and want to also convert to a Roth IRA later. But you always want to keep some rules in mind to avoid penalties when you're doing these type of conversions. One rule to make sure you understand is that taxes can never be avoided. You're always going to have to pay taxes on earnings. So for example, from that non-deductible IRA that we mentioned just a moment ago, Let's just go ahead and take a look at this example. You put $5,000 into a non-deductible IRA, but before you did that conversion, that account had grew to $5,500. Well, you're going to owe taxes on $500 from that conversion. Another thing you want to take very seriously is making sure you do the proper transfers. You always recommend that you do a trustee-to-trustee transfer. Never allow those funds to get into your hands and then decide to do the transfer, because it can cause problems if you don't do it in a timely manner. And the other main thing to take note of is this thing known as the pro rata rule. Now, we won't go into that in this video. We're going to make a video on this pro rata rule that I think you should check out. But basically, what happens is that the IRS looks at all of your traditional IRA accounts, and they combine that to determine what percent of your conversion to that Roth is going to be taxable. This is a very important rule to understand, and that's why we're going to do a separate video on this pro rata rule when it comes to Roth conversions. So I hope that this information was beneficial to you. I hope that you learned a lot from it. We try to make them short and sweet. But what we would like for you to do, if you have any questions or if you have any comments, please leave them in the comment section below. And please don't forget to subscribe to our channel.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, please check out our other videos that we've created to give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.